The year 2011 was a rough, volatile and a dangerous year for Indian investors. But come 2012, well, things improved for Indian markets, Indian economy and Indian investors. To discuss that, I have with me on this edition of Crystal Gazing 2012, Ramesh Damani. Ramesh, of course, needs no introduction whatsoever. He's a great stock picker, a true value investor, above all, a great human being and a very dear friend of mine. Ramesh Damani, what a delight to have you back on ET Now. Thank you for joining us.
Thank you, Nikunj. Happy New Year to you and all your wonderful staff and viewers.
Thank you. Ramesh, 2011 was dominated by three large global and macro headlines: high interest rates, EU debt problem and high commodity prices. What to your mind will influence the script for 2012?
You know, a wise man told me once, Nikunj, that either you get cheap stocks or you get good news. You really have both of them at the same time. So the news is so uniformly bad, which leads me to believe that at least we're getting good prices on the bourses. You know, and I think some of, if you recall, in the December series, the Nifty was barely down 1.5%, but the mid cap was down 10%. So you have to think bargains are there. Uncertainty is always a part and parcel of markets. Always at the peak of a market is when there's certainty, and there's absolute belief that nothing can go wrong. That's always, you can, write home that. That's always the top of a market. So uncertainty will continue to plague us. I think we're leading into an election season in 2012 across the globe, as you said. And, uncertainty will, of course, be there, but crisis and opportunity are sometimes two sides of the same coin.
Mm-hmm. But is this current environment more like an opportunity, a time to go and pick some bargains?
I have been doing that and I have been wrong. I think the last quarter has been very painful to stock pickers. People like me, for example, who look in the mid-cap space, who look in the small-cap space to pick ideas. I think the market has been very, very brutal in its punishment, almost painting everything with the same brush. I can understand people with a heavy debt load, for example, or people with heavy capex, the market punishing that. But market is punished across the board. It just has been an extremely foul mode. I think the retail investors just gone on strike. They've withdrawn from the market. So they have punished them. So yeah, would you go and pick out stocks? Yes, you do that because that's what you do for a living. And if you can't do it in the face of such pessimism or in the face of such, stay away from equities, then you clearly aren't a good stock picker. I'm not suggesting the market will give you a sharp rally and you can double your money in 3 months. But, the values are plentiful, and my job as a value investor is not to try and time the market, but to try and buy good stocks and be patient about them.
If I look at the history of Indian bear markets, it's seldom that any of the bear markets have lasted more than 2 years. We currently are already 14 months down. Do you think somewhere in 2012 this bear market will come to an end? The bull market may not start, but bear market certainly will come to an end.
You're right. Typically 12 to 15 months has been the length of the bearish market. The 2008 from the peak we had 12, 14 months. The 92 was again 12, 14 months. So it's a fairly acute observation. So logic would suggest that, yes, we would see bargain hunting coming out there. But of course, there's nothing to say markets won't move sideways. I mean, from 92 to 2003, the market moved basically sideways for a period of 10 years. And I think the high water for the Sensex remains 21,000. It's unlikely to pierce that, in a rapid fashion. So, you can make a case that the market won't go down further. And, we'll need, some fresh economic impetus, some new policy coming out. Maybe that'll happen after the UP election in India, before the market can, move ahead. But, figuring out the bottom of a bear market is very hard. You only know it after time. After this pass, you can say, yes, that was an effective bottom of the bear market. I remember anecdotally that in the Gulf War crisis in America, the market, the Dow bottomed out at 2,700, made a gap after the first invasion of Iraq and then never came back to those levels. And only in perspective you realize that was the bottom of the market. So anecdotally, yes, we should make a bear market bottom sometime in 2012. But whether it's a final bottom or not, we'll know, I think, months later, sometimes years later.
Goldman Sachs just released a note on 30th of December 2011, and their view is that the best of BRICS is now behind us. Would you agree with Goldman Sachs?
I hope not. I think we all, live in this country. We're all, great believers in India's story. And, I'm not sure that the best of the BRICS is behind us. I'm pretty confident that the Indian economy will become, say, as Mukesh Ambani put it very correctly, we go from being the third world country to the third largest economy in the world. And that has profound implications for investment. I mean, if we are going to become a $15 trillion economy over, say, the next 10, 15 years, there are profound implications for investment, whether it's in housing, whether it's in auto, whether it's in consumption, whether it's in entertainment, So, I have to believe that the best of India is ahead of us, not behind us. Now, in terms of the averages, markets, are very stubborn. The U.S. witnessed a period of unprecedented growth between, say, 60 and 69. GDP was growing at 4%. The economy was chugging on all steams. And yet the Dow went nowhere. It remained, 1,000 is the high water mark. So we're not suggesting that the index will march ahead in lockstep with the economy. But individual stocks will continue to do well. I always point out to you, Nikunj, that between 92 and 2003, Infosys, went up, almost 100x or maybe 500x in a market that is essentially flat. So, it will be a good time for stock pickers. It will be a good time to invest in India. And I see no reason to lose that bullishness. Yes, markets are punishing us, but that's the nature of markets. I mean, it's something you have to learn to live with.
So what could challenge your conviction?
Well, if we actually get down to a breakdown, say, in Europe, or we actually get to rampant inflation globally, that would, of course, put a severe dent in worldwide confidence in equities. So, that is like trying to hold a dike with, two fingers. It's not going to happen. The gush of water is going to submerge all economic markets. And in fact, the growth that we're all assuming that India will grow 6% worst case scenario, 6.5% worst case scenario. That also will not happen. We'll go back to 2% growth, 3% growth, in which case, of course, the market is non-sustainable, Nikunj.
I'm not playing with words, but are you hopeful or are you confident?
I'm hopeful. Clearly, everyone's confidence has been dented. This has been a very brutal bear market. All bear markets are brutal out there, and it never ceases to surprise me. The same thing repeats itself. The cat gets completely slaughtered. You figure that people will learn and they won't throw away these stocks, but it does happen. So, you're hopeful, you cross your fingers, pray, lead a clean life, hopefully you'll do well.
When we started the year 2011, the top macro trade was short dollar, long emerging markets, long commodities and long commodity stocks. The top trade for 2012 is long dollar, sell emerging markets and hide in US treasuries. Do you think by the time we'll wrap out of 2012 or we'll start 2013, the top macro trade could change?
In my opinion, I think it's very strange, but my opinion, the best asset class in 2012 will be the Dow. It's a contrary call, but if you look at the technical, see, bull markets require a cocktail of three things. They require skepticism, they require liquidity, and they require leadership. No one believes that, ever believes that America's problems are unsurmountable compared to, say, even India's, for example. Leadership. Look at the technology companies. IBM is making lifetime highs. In fact, someone pointed out that out of 12 out of 30 stocks in the Dow are at lifetime highs out there. And there's ample liquidity. The Fed and the ECB have signaled ample liquidity out there. I think the Dow will surprise on the upside. And the best case scenario is that once the Dow leads, other emerging markets will follow. It typically is a train effect. First the Dow goes up. The Dow, my particular sense is that the Dow will head back to 14,000, which is its all-time high peak. The price action in America suggests that the smart money is moving into equities. You've thrown the bucket, the dirt, everything at the Dow, and is still closed flat for the year, maybe up 3-4% for the year.
6 actually.
Yeah, 6% for the year. So, my sense is it's going to have a second superior year up, maybe 10, 12, 15%, which will take it back in the realm of 14,000. So my call is that the Dow will do well. If the Dow does well at some point, other emerging markets follow. I'm not a particularly great believer that if the Dow is doing well, people will pull out of emerging markets and put all the money in Dow. I think some money will come to emerging markets, as it typically has.
Insisting on words like value, contrarian buy, bargains, where are you table thumping bull?
Well, we look at what we're trying to build the portfolio. I think consumption will continue to do well because, there is an article of belief that the Indian middle class will grow, that will become, half our population size in the middle class. Consumption will continue to do well. So whether the various ways that you can skin a cat, you can, to benefit from consumption, you can buy property companies because they're referring consumption, you can buy media companies, you can buy a packaging company. So there are various ways to skin a cat. So I think consumption as an overarching intellectual theme will continue.